Can you really buy a home in Ottawa with a $100,000 salary in 2025? The answer might shock you. Hey, I'm Sernoskie with LePage, and I've helped tons of people in Ottawa with $100,000 salaries find their perfect home. And I know what it takes, and in this video, I'm going to show you exactly how you can make it work. By the end of this, I hope that your path to owning a home in Ottawa can become a little more clear. Even if all you take from this video is a deeper understanding of our current affordability landscape, then that's okay. In today's video, I want to talk about the question you might have when it comes to thinking about buying a home here in Ottawa, and that is, what home price can I afford on a $100,000 annual salary? And if you want to know what home price you can afford with a different salary, leave a comment down below and I'll be sure to get in touch. So let's get into it. To answer this housing affordability question here in Ottawa, I'm going to walk you through a clear calculation factoring in property taxes, monthly utility costs, and current interest rates, all while ensuring that housing expenses stay within the maximum debt ratios recommended by lenders. First, let's establish a financial foundation. With a $100,000 annual salary, your gross monthly income is approximately $8,333. In Canada, lenders use two key debt ratios to determine mortgage affordability: the gross debt service, or GDS ratio, which should not exceed 39%, or the total debt service, or TDS ratio, which should stay below 44%. The GDS ratio includes your mortgage payment, including principal and interest, property taxes, heating costs, and half of any condo fees, divided by your income. And the TDS ratio adds all other debt payments, like car loans or credit cards, to the GDS expenses. For simplicity, let's assume you have no significant debts. So we'll focus primarily on the GDS ratio to keep housing costs below 39% of your income, or $3,250 per month. We'll also use the recently introduced 30-year amortization rules to lower your monthly payments. Let's dive in and make sense of the numbers so you can feel confident about your home buying journey in Ottawa in 2025. According to recent data, the average home price in Ottawa in April 2025 was $707,180 with a benchmark price of $631,200. Single-family homes averaged $868,000, and townhouses came in at $577,000, while condos were $436,000. So given a $100,000 salary, we'll aim to find a home price that keeps your monthly housing expenses within the GDS limit. Next, we need to account for the cost of home ownership. These include your mortgage payment, which depends on your home price, your down payment, interest rate, and 30-year amortization period. Your property taxes, which in Ottawa are approximately 1.19% of a home's MPAC assessed annual property value, and your home utilities, including electricity, water, and heating. The average monthly utility cost in Ottawa is around $310 based on estimates. And condo fees, if you're purchasing a condo, for an entry-level condo, we'll assume around $300 per month, with half, $150, is counted towards the GDS ratio. To calculate the mortgage, we first need the current interest rates. As of June 2025, the Bank of Canada's policy rate is 2.75%, and a fixed 5-year mortgage rate from major banks averages around 4.5 to 5%. However, lenders apply a stress test requiring you to qualify at your mortgage approved rate plus an additional 2%. So let's use a 5% mortgage rate for calculations and qualify you at 7%, and that's the stress test with a 30-year amortization. And if we try it at a purchase price of $475,000 with a 10% down payment of $47,500, it leaves us with a mortgage loan of $427,500. So for a mortgage at that amount at 7% over 30 years, the monthly payment would be $2,844. Adding taxes of $356 and utilities of $310, the total is $3,510. This won't work as it exceeds the GDS limit, so to pass the stress test, you need a smaller mortgage. Let's try a $450,000 home with a 10% down payment of $45,000, and that's resulting in a $405,000 mortgage. At 7%, the mortgage payment would come out to $2,694, with taxes of $338 and utilities of $310. So the stress test total is $3,342, but this is still above the GDS limit. And after some more number crunching, a home price of $435,000 works, with a 10% down payment of $43,500, and the mortgage will come in at $391,500. At 7% over 30 years, the monthly payment would come out to $2,606. And add in our property tax and utilities, we arrive at $3,242, and that's just below the GDS limit of $3,250. To boost affordability, you should consider first-time homebuyer programs. The First Home Savings Account lets you save up to $40,000 tax-free, And the home buyers plan allows you to withdraw up to $60,000 from your RRSP. These can increase your down payment and lowers your monthly mortgage payments. You'll also want to shop around for mortgage rates. Some lenders offer rates below 4.5%. So in conclusion, with a $100,000 salary in Ottawa in 2025, you can afford a home price around $435,000, which is likely a condo with a 10% to 12% down payment using a 30-year amortization. Townhouses are possible, and single-family homes are achievable with a 20% down payment or additional income. Don't forget to visit the description in this video to get your copy of my free homebuyer guide, which contains a ton of valuable information. I hope you'll consider subscribing so you don't miss out on a ton more content just like this. I hope this video has really helped you gain a better understanding of Ottawa's current affordability landscape, and if you're thinking about buying a home, my team and I are here to help. And whether you're ready to buy now or you're just starting out, let's connect to chat about how we can help you achieve your real estate goals. Please visit my website in the description below and let's get started.